Hello and welcome to today's daily analysis for the 28th February 2024. So first of all, for the US dollar, it was kind of stuck around 103.8 and the Federal Reserve is not rushing to cut interest rates. The chance of the rate cut in March is low, and for May, it's only around 20%. People were keeping an eye on important US economic data to guess what the Fed might do next. The dollar held above 103, but a drop in the US Treasury yields made some people worried, even though the Fed's positive stance helped. There are also signs that selling pressure is getting stronger, according to the indicators like RSI and MACD. Looking at the charts here, if the dollar goes above certain moving averages, it might show strength, aiming for levels like 104.97 and 105. But if it falls below 103.48, things could turn bearish, possibly heading toward 103. This week's economic data could give more clues about what might happen. So for the price of US crude oil, also known as WTI, went up to $78.67, mainly because more people were traveling after the holidays, and there were expectations of China buying more oil. The tensions in the Red Sea also helped keep the prices high due to worries about the disruptions in the oil supply. On the other side, a member from the Federal Reserve, Jeffrey, talked about not rushing to change interest rates, and that can impact oil prices too. The oil prices have been a bit all over the place lately, not going much above $79.15 and 80. Right now it's hovering around 78.7, and if it goes higher, there are some challenges at 79.15 and 80. On the downside, if it drops below 77.59, there could be a dip between 75.89 and 74.07. So it looks like it might be tough for those hoping for the oil prices to go up this week. The gold prices went up to over 2030 because the US dollar was not doing so well, and the people were still interested in buying gold, thinking it's a safe investment. Even though the US Federal Reserve might keep interest rates high, which usually make gold less attractive. The current uncertainty in the market is still pushing gold prices up. Now, when we look at the numbers, if gold stays above 2032, it might go even higher, maybe reaching 2041 and 2048. But if it falls below 2032, it might face some challenges, dropping to support levels like 2017, 2016, and 2015. If it goes below 2009, it could go further down to 2005 or even hit 2000. So there's a bit of a back and forth going on in the gold market right now. For the Australian dollar, it went up to 0.655 as people got cautious before the Australian releases its monthly CPI data. On Monday, the pair dropped a bit because of a mixed feelings in the market and higher US Treasury yields. Even though the US dollar fell, investors are waiting for important economic data from the US and Australia. And there's a bunch of Federal Reserve speakers this week. There's some info about durable goods orders, housing data, and consumer confidence, suggesting that the Fed might cut interest rates later this year. The AUD is feeling some pressure because of the slow housing market, increasing Chinese inventories, and the iron ore prices dropping. So, looking at the chart, if the pair falls below 0.65, it might go down to 0.6468 and 0.6442. But if it goes above 0.656, it could test 0.6595 and 0.66. So keep an eye on those numbers to see where things might go. For our pound, it started the day at 1.27 but dropped to 1.2650 due to a change in the market mood and some strong words from the US Federal Reserve. Even though it went up earlier in the week, it can't hold the position for that long, partly because of the mixed moves in the US and lower confidence among British consumers in February. Looking at the daily chart, the pound is stuck around 1.27, but it still seems positive, staying above 1.2628 and 1.26. Some indicators called the RSI supports the idea that buyers might still be interested. If it goes above 1.27, it could aim for 1.275 and even 1.28. So keep an eye out there for these numbers to see where things might go. And then next we have the Japan yen. On Tuesday, the yen got a bit stronger because Japan's consumer inflation was slightly higher than expected. People started thinking that the maybe Bank of Japan would change its policy soon. This made the yen, considered safe haven, more attractive. On the other hand, the dollar didn't do so well for the second day because the US Treasury yields dropped. Looking on the technical side, for those interested in saving trading, it seems like people who think the value will go up, bullish traders, might have an advantage for now. The Japan yen pair could go up around 151.45. There's a positive momentum on the daily chart, but it could not go super high territory, suggesting there's still room for it to go higher. However, if it drops, there's support at 150, and if it goes even lower, there are levels at 149.40 and 148.92. Breaking below 148.92 could change the positive outlook to a more negative one. And then lastly, we have the euro, which was hanging around 1.085 on Tuesday after US durable goods orders didn't do as well as expected in January. The euro has been doing better against the dollar since February 14, mainly because the US Treasury yields are down, making the dollar weaker. The pair didn't change much during the Asian session on Tuesday. However, this week there's a bunch of important economic data coming up, like the EU consumer confidence, US GDP, and German retail sales. Even though the euro USD didn't go above 1.0888 on Monday, it's been doing pretty well lately, staying above 1.08 and 1.0795. If it goes past 1.0888, it might aim for 1.0916, but there's a chance it might face some resistance, and there's a key level at 1.076 to keep an eye on. And that is all for today. Thank you for watching and have a nice day.